Corporate Finance Core, Topic 4, Valuing Stocks, Learning Objective 5. We're going to understand the types and characteristics of stocks and the functioning of stock markets. So think about two types of stocks. You have common stock and preferred stock. And when I say stock, what I'm referring to are common stock. So a common stock is a ownership of a firm. So everyone owns a share, has ownership in the firm. And what rights do you get as a common stock owner? If I go out and just buy 100 shares of Walmart, what do I have a right to? Well, you have the right to vote on important issues. But there may be classes of common stock with no voting rights, but most of them carry voting rights. So if they wanted to have a major acquisition or sell off or some other something like that, you'll have a right to vote on that, even though I generally tend to throw those things away when they're emailed to me. You have the right to receive a proportional dividend if it's paid. So that's an important distinction with a stock. With a stock, you're never actually promised to receive anything, any cash flow. However, if the company decides to pay a dividend, you will get your dividend. All right, so you'll get a proportional dividend. So if a company makes a $10 million payment for dividends and there's 10 million shares, you'll get your dollar. All right, now dividends are taxable income for the shareholder. Now, you also have the right to share proportionally in assets and liquidation. So the company liquidates, they have to pay off their creditors, and if any money's left over, you'll get some share back. Less common, I should say, shouldn't use the word common, a minor source of financing, that's what I have listed here, is preferred stock. Now, preferred stock is kind of an interesting little animal here. It's somewhere between a bond and a share. Now, it is technically an ownership of the company, but it's a non-voting share, but it pays a fixed dividend. So when you buy a preferred stock, it might say this stock pays 4% dividend on $100 par or something like that. It pays a 4% dividend on some amount. And if company goes bankrupt, you'll receive some kind of stated value if it's liquidated. Now, some of these preferred stock may be convertible into common shares. So say after this particular date, this preferred stock becomes 2 shares of common. It's often callable, meaning the firm could just kind of send your money back and you no longer own it. They often carry credit ratings like bonds. Since you're getting this fixed dividend stream for a while, the credit agencies will often, like S&P, say this is a single A or double A rated preferred stock, meaning it's most likely you're going to get your money for a while. However, preferred dividends are treated like common stock dividends. They're not tax deductible for a firm. And again, it's a relatively minor source of financing. But when I say stock, I'm talking about common stock. That's what most of the financing is with public companies. Let's talk about stock markets. So we got 3 types of markets I want to talk about: the primary market, the secondary market, and the over-the-counter market. So the primary market is where companies sell their newly issued shares to investors. That's where the company actually raises money. So a company that needs, say, $1 billion to launch some new business, it will work with an investment bank to figure out how to issue some amount of shares at some price to raise $1 billion. So this is the market where newly issued shares are issued. Once those shares are issued and the company gets their money, and then the investors now own the share, those shares are now traded in the secondary market. All right, now the secondary market, where those old shares are now traded, no new funds are actually issued or gained or raised as that stock price goes up or down. That's just where shareholders trade with or investors trade with other investors. However, the existence of these secondary markets is a great source of value for shareholders. So say there was no secondary market for stocks. I just bought my share of Walmart and I just held it. And if I want to get rid of it, I have to find somebody that wants to buy it from me by, I don't know, listing it on eBay or Facebook. Well, that doesn't seem very nice. However, the fact that these shares of Walmart are traded on the New York Stock Exchange, which is a physical location that runs trading, or the NASDAQ, which is a computer network for trading, the fact that millions of shares of Walmart are traded, and I can do that electronically now, very easily, or through my broker will work through these exchanges, that creates a great value for these stocks. They're more value than just getting the shares, the cash flows. And then you have the over-the-counter market. So you have the primary market, you have the used share market, where the New York Stock Exchange and the NASDAQ are the two big ones you see quoted all the times. And then you have the over-the-counter market. This is generally where really small capitalization stocks that have very small values are traded. They're sometimes traded, they call them pink sheet stocks. This is a less regulated market. Not all the data is reliable, so be careful trading on the OTC market, or someone says it's a pink sheet stock or a penny stock. A couple of things I would just mention before we end this topic is indexes. So people say, how's the stock market doing? What they're talking about are usually the Dow Jones Industrial Index and the S&P 500. Someone says, how's the stock market doing? Oh, it's up 1%. What they're usually talking about is the Dow Jones, which is an index it's kind of the average share price, or some kind of formula for the average share price of about 30 companies. And the S&P 500, which is kind of like the average share price of the S&P, or weighted average of the S&P 500, which is about the 500 largest companies in the US. So when people say, how's the market? They're really talking about the Dow or the S&P 500. The better indication of the market is the S&P 500. Now, it is only 500 stocks, but what you'll find is both of these trade about very similar. Usually if one's up 1%, the other one's up close to 1%. And I guess you also hear the NASDAQ, the NASDAQ composite. So these are the three indexes you'll hear quoted about the stock market. The NASDAQ are also a large number of stocks, but it's more tech stocks. And some companies might be in all three of these indexes. All right, so I'll just give you an idea kind of what the Dow, the S&P, and the NASDAQ actually mean. How many now? In reality, there are about probably 7,000 to 10,000 stocks traded in the U.S. So the S&P 500, even that 500 stocks isn't a great measure of all stocks. However, the value of the 500 biggest stocks in the country. Recent data I saw is about 80% of the value of all stocks in the country. So it is a good indication of how the market is doing. Stock market reporting. So I just went to Yahoo Finance, typed in the symbol WMT. That's a stock market symbol for Walmart. Every stock has a symbol. And what it tells me here, this is traded on the New York Stock Exchange. On this day, it's trading for 105. It's down 3% from the previous day. It tells me that it opened the day at 108. It closed the day before at 109. The bid and ask prices are the prices for being quoted for buyers versus sellers. So it looks like I could maybe buy some new shares at 106.7 and sell some shares at 106.16. At this particular day, the volume was 6.7 million shares. The average volume is 5.8 million shares traded per day. On this day, the stock price ranged from 106 to 108. And in last year, the prices ranged from 85 to 115. So this gives you some information about stock market reporting. And then it just lists some other things. It talks about the beta of the stock. Remember, I mentioned the beta is a measure of risk. Actually, a beta of 1 means it has average risk. So the last 3 years measure of the risk of Walmart it's about 0.67. Means it has a little less risk than the overall market. The market cap is the total value of all stock for Walmart. So if you take the number of shares outstanding times the share price on this day, there's $302 billion worth of Walmart stock. The PE ratio trailing 12 months was 37, had earnings per share, say net income over number of shares, of $2.86 per share. Looks like they're going to have the new earnings announcement date of August 15th. Looks like the next dividend is expected to be $2.12. And if I divide 212 by their current stock price, it pays a 1.94% dividend. So if I buy the stock and simply hold it for dividends, I'm going to get about a 2% return. And this is a date in which you have to own the stock by this date to receive the dividend. If you buy it after that date, you don't receive that next dividend. Usually dividends are paid quarterly. And here's just a price target estimate. I'm not even sure where this comes from Yahoo Finance. It's some survey of investors. And so it just gives you some idea of what information is available for stocks.